The economy enters the final stage before the downturn. Hey, everybody, you're watching Bull, Boom, Bear, Bust. My name is JJ. We're back with another dose of economic reality. I'm dressed in my warm clothes today. I actually do not have heat where I broadcast from, so that's the reason for the change in the way I've been dressing here. Some people have been asking about that. Hey, what's with all, do you live in California? What's with the stocking cap? Yes, it gets cold in California also. Some people may not call it cold. If you're from the north, you may not call it cold, but in the evening hours, overnight, it gets into the 30s, and sometimes you wake up, there'll be a little bit of ice. Unless you're up in the mountains. If you're up in the mountains, then it's like living in the north. It can be pretty snowy in California. Well, let's go ahead and get into it here. We're in the phase right now in the economy. I call it the state of denial, or this is the current phase of denial that we're in. But there's a lot of people out there telling you and predicting what's going to happen. Just look at all the recent calls for rate cuts. Why are we calling for rate cuts? Why is anybody calling for rate cuts if the economy is strong and the consumer is resilient, right? So let's go ahead and start right here. And we'll start here with a famed businessman, Bill Ackman. In a recent interview, Bill Ackman says rate cuts will come sooner than expected. And this ties in with all the evidence that we're seeing a drastic slowdown in the economy. But here's the dangerous part, and here's why I call this the false optimism here phase of the economy. And we've seen this right before previous downturns. Remember, previous downturns where many people tipped off or given a warning that there was a big economic downturn. No, you would have thought that the experts out there, the central bankers and all the talking heads on the news channels, you would have thought that they would have given everybody a heads up and no one would have lost their home. No one would have had any financial difficulties. We wouldn't have had to have rescue programs and cancel foreclosures and do all these things to help people if people would have been aware and if people would have been forewarned. But no, we never see that before downturns. And now we're in that point, we're at that period where the downturn is right around the corner and nobody's warning about it except for a few people, maybe like myself and others out there that are actually looking behind the headlines. And speaking of headlines, take a look at this. Here's a very rosy looking headline, which if you read into it, it's actually pretty bad news. GDP in the third quarter raised to 5.2%. It does say, but surge in growth is fading, right? Sounds pretty good on the surface, right? But if you go down into the article, it actually tells you some not so rosy reality. It does say consumer spending is about 70% of the economy. What have we been seeing lately? Have we been seeing consumers spend money that they have saved? No, there's been a record increase in debt. So a lot of the consumer spending, most of the consumer spending is debt driven. Is that good or is that bad? That's bad, right? Well, you may think it's bad, but the people that calculate the numbers, they say that's good. They say you going into debt, you spending money that you don't have, that is good. Also, it gets even worse though when you look at this. The very last line of this article tells you something else that contributes to this quote unquote great GDP number. Government spending was also a strong contributor to GDP. So in other words, when the government borrows money to fund war, for all these programs that we're doing here, of course, not just in the US, but globally, that's chalked up into the GDP number. But people will just see that number and they'll think that everything's fine. The economy is actually getting stronger if you look at these numbers on the surface, but you have to look at what's behind the numbers, right? So most of you know this, but I always want to bring you recent examples of what's happening because we're getting to the point now where consumers are going to be so tapped out, there's not going to be any other choice but a big economic downturn. The question is, what will the response be to the downturn? Will they cancel foreclosures? Will they cancel car repossessions? Will they cancel evictions? So we will not see any price corrections or minimal price corrections if those things were to happen. All right, quick 1 minute word from our sponsor. We'll see you right on the other side here. And now a quick word from our sponsor. Dark clouds are gathering as markets shudder. Stocks are sinking, currencies stumbling. Fear and uncertainty reign. The Middle East, Ukraine, Taiwan, the debt, it's endless. Yet one asset stands firm, gold. In crisis after crisis, gold is there in the background. Its enduring value guards against loss. like a missile shield against incoming. While paper wealth burns, gold persists. Shield your savings against looming threats, war, recession, contagion, and avoid the frenzied panic of the unprepared. Take control in the chaos. Fortune favors decisive action. Get hold of gold now before it's out of reach. Right now, Noble Gold Investments offers a free 5-ounce America the Beautiful coin with every new IRA. Claim your free coin today to secure your financial future. As this new storm gathers, panic looms, and some of the places you were thinking for your money, well, they don't look so clever anymore. Secure your future against disaster. Open a Noble Gold Investments IRA and claim your free bullion coin today. Go to noblegoldinvestments.com now. Noblegoldinvestments.com, the only company I trust. Link down in the description of this video and in the pinned comment. And instead of listening to these statisticians or the entities that give us these numbers, the GDP, etc., just ask the average American. And here's a recent example right here out of CNBC. Americans are doom spending. Here's why that's a problem. Nearly all Americans are concerned about the current state of the economy. Still, many continue to spend more and save less. So if people are concerned about the economy, why are they spending more and saving less? Well, it's a way that people cope or try to deal with fear, anxiety, and depression. A lot of people shop, believe it or not. So even though you would think taking on more debt would cause more anxiety, more depression, it's just the opposite. It makes people feel good when they get that package with that Amazon package sitting on the porch or coming out of the store with a whole bunch of bags. It makes people feel good for that moment. But people oftentimes want to feel good in the moment without thinking about the consequences down the road. And we see that with this kind of want it now society where you want things at the snap of a finger. You want to drive through and get the favorite drink. You want to make your meal in minutes and microwave it. That's just modern society. And that's how a lot of people are acting. Continues here, doom spending may be one way to cope with stress as economic fears mount. I didn't pre-read this article, by the way. That's my first time reading this subheadline. However, it comes at the expense of your financial well-being. Also, I don't think they're talking about this here, but a big part of it that I often mention here in this channel is this huge get out of jail free card. And I know people personally that have done this, and I can't blame them, but people know that they have bankruptcy at the end of the day. So why not have as much fun as possible? Why not spend as much money as possible and just file bankruptcy when everything hits the fan? Well, a lot of people, that is their plan. That's their hit the fan plan, is to write it all off and erase it. And now we're seeing steps taken to help make it easier to discharge student loan debt in bankruptcy, right? So if everything was fine, why do these changes have to be made? Why are we seeing this recent push to include more student loan debt in bankruptcy? We also see other things that have happened over the past few years to keep people's credit scores elevated. For example, medical debt was no longer being reported as a negative on your credit file, which helped keep credit scores higher than they would have otherwise. Why do credit scores need to be higher? Well, so people can continue to take out loans and borrow money. That way the economy continues to look good. And it goes on here. Nearly all Americans, 96%, are concerned about the current state of the economy, but yet we're still seeing this record holiday spending and record debt accumulation. Continues, even as inflation and high interest rates have squeezed budgets, a record 200 million shoppers turned out between Black Friday and Cyber Monday, according to the National Retail Federation. This season, holiday spending is expected to reach record levels. So far, Black Friday and Cyber Monday were records, but we'll have to see how this goes to the end of the year. As long as credit continues to be available, as long as card companies, Visa, MasterCard, etc., as long as they don't drop people's credit limit, I'm pretty sure we're going to see record spending. This holiday spending is expected to reach record, totaling up to $966.6 billion. Wow, that's interesting. 966.6. The NRF projects. That's close to $1 trillion, folks, in holiday spending. And add that on top of all the current debt. We already see $1 trillion+ in credit card debt. We see what, 1.6 trillion in car loans. We see several trillion in student loan debt. I mean, this is going to be, it's already unsustainable. It's just the last gasp, I think, before economic reality is going to be staring people in the face. And when you go back to the GDP numbers and the spending, remember a lot of this is government spending. And this is one reason why governments like to spend money on war. War increases the GDP, it makes the economy look better. So war gives the perfect excuse for spending. That way they can put these nicer numbers than they would be otherwise without the war spending. And of course, we have the defense contractors that are making millions off of this. And a lot of people get rich during the time of war. All right, here's something else I wanted to point out here. The optimism about the stock market. The optimism about the stock market here. This is out of Market Watch. Favoring 5% accounts and CDs over stocks. Think again. In other words, they're saying you're silly, you're foolish if you're in a 5% savings or CD versus being in the stock market, right? The stock markets, the indices in general as a whole have not eclipsed the highs that we saw at the end of 2021, early 2022. There's a few single stocks that have done that, but the indices as a whole have not done that. So unless you're a really good stock picker, it's probably better to be in a CD. That's my opinion. I'm not giving financial advice, but there are people out there picking stocks. I just talked about, 2 videos ago where I'm shorting the retail ETF because I think retailers have seen also their last gasp before economic reality comes staring them in the face. So that's just one of the things I'm doing here, investing. I also continue to hold minor stocks. And speaking of minor stocks, gold is doing very well here recently. Gold close to a record high. And we also look at gold's 2064 as I record this. Silver, $25.35. I think they're both going to be taking off here if we see inflation skyrocket, which we will if they do these rate cuts, which I think they will. All right. Some people say they're not going to do rate cuts because they haven't hit their inflation target. Well, do you think they always are going to do what they're supposed to do? I ask you that question. Just because they say they have an inflation target of 2%, which we haven't hit, doesn't mean that they will not cut rates when the next crisis arrives. And I think the next crisis is going to be not too far from now. In fact, you have to look at a lot of different areas for what type of crisis are we going to see. There's already some new health scare over in China, and they're saying it's spreading globally. Sounds pretty familiar. It kind of sounds like late 2019, early 2020, if you ask me. Now, another thing we've been talking about here quite a lot is these job creation numbers or new jobs added to the economy. So many of these jobs are second jobs and they're part-time jobs, they're gig economy jobs, even third jobs. But here's a recent headline: cooling job market, no reason for panic yet. They put that word yet in there, so they want to cover their own, Economists say it's a slowdown, not a collapse. U.S. job growth fell to 150,000 last month as unemployment rose to 3.9%. And remember, these jobs that were added in the previous months, the majority of them were second jobs. And also you have to throw in government jobs. When the government spends money, they expand the workforce. That gets put in as new jobs added to the economy. Do you see how this works here? Do you see how this whole facade of economic growth is engineered, right? It's a pretty big scam that I think a lot of people don't realize. And out of this article here over at CNBC, we see monthly job creation. And we look over here to the far edge here, and we see this October number doesn't look pretty good. Doesn't look very good compared to 22, to the numbers back last year. And in fact, these are pretty dismal. This is actually the second lowest since June. And it gets more interesting here as we continue into this article. The unemployment rate looks to have bottomed out. We see it did dip below 3.5% earlier in the year, but we've been seeing this uptrend now, and now we're at 3.9%, and we have to go back to January 2022 to see the unemployment rate at 3.9%. Then again, we know that this is not the real unemployment rate. With 100 plus million people out of the labor force, this is another kind of engineered number where it looks a lot better than it actually is in the real world. Now let's take a look at the year over year change in the average hourly earnings here in the US. In early 2022, this hit a peak close to 6%, right? 5.9%, so pretty close. But that has been declining. And as of October, it was 4.1%, which is not bad, a year over year increase in your wages or your salary. But here's the thing, if the inflation rate was really in the 3% range, like we're being told, then this 4.1% number would be really good. But we know it's much, much higher than the official number that's been fed to us here, right? All right, so I think a lot of you know this. A lot of you are ahead of the curve. Most people here on this channel, I think, are going to be ready for what's around the corner. But I always want to bring you recent news, charts to help you prepare and get ready for what's coming. And, hunker down. I always have to remind people here at least once a week, have 30 days emergency supplies out of the system. We're talking cash, food, water, essentials, emergency items, self-defense mechanism, because we're going to see things really heat up as far as the despotism amongst the population, right? More stores getting looted. That didn't slow down. We see some of that happening over Black Friday, and pretty soon it's likely going to be your house. So with all the economic news and business information here, out here, business data, we have to think about, our safety. We want to keep our money. Do you want to keep your money at home versus in a bank? Well, I mean, some people think that it's safer in a bank. Other people think it's safer at home. It depends on your neighborhood and, what the crime stats are in your neighborhood, I guess. So you want to look at that as well. So that's going to be to each individual to decide, not something I can decide here for you, but of course, something you can think about on your own. Do your own research, do your own due diligence. Just take this information as information and gather it into your decision-making arsenal on how you're going to navigate this. Okay, people, we're going to wrap this one up here. I want to thank every one of you for being here. Please give this video a like. And if you're not subscribed, please subscribe. It really helps the channel. I know most of you that watch are not logged in, so you can't subscribe because you're not logged in. I don't think you can give a thumbs up when you're not logged in either. So please log in for me. Enter your username, password, log in so you can get a like and subscribe on this video. Help us out. We really appreciate it. I'm going to keep everybody here on top of the latest news and analysis. I'll give you my opinion, and I'll show you these crazy numbers, that we're being expected to believe, And we'll be back here very, very soon. Everybody keep stacking. Bye now. Peace.